It's time to revisit Newell Brands, the company created when the old Newell Rubbermaid merged with Jarden back in April. Put it together and you've got a very attractive, diversified consumer products company with a host of brands like Sharpie, Papermate, Goody, Mr. Sketch, and Rubbermaid coming from Newell, along with Mr. Coffee, Oster, a crockpot, kitchen gear, not to mention Coleman outdoor equipment, Rawlings baseballs, where Cubs third baseman and home run hitter Chris Bryant is an advisor, as well as Yankee Candle. Dozens of other niche brands. More importantly, Newell Brands has a terrific management team with a lot of experience cutting costs, which is exactly what you needed for this kind of transformational acquisition. I like the stock so much that roughly a month ago we started buying it for charitable trust. You can follow along at actionalertsplus.com. Since then, Newell's announced a new post-merger growth game plan. Involves selling off certain assets, paying down debt faster, increasing its focus on e-commerce. Last Friday, Newell Brands reported a mixed quarter, a 5-cent earnings beat off a 73% basis, weaker than expected revenue. Stock got dinged, continued to go down today, but I think it's a high-quality story. Don't take it from me. Let's check in with Mike Polk. He's the CEO of Newell Brands. Find out more about how his company's doing, where it's headed. Mr. Polk, welcome back to Bad Money. Good to see you, sir.
Good to see you.
How are you? Okay, so I was on the conference call, and I've got to tell you, I think that there was, I almost kind of want to do a do-over because I think the analysts, you're in flux, so to speak, and you have laid out a very good long-term plan. And I felt to some degree, I know these analysts because they've been around for a long time, they're very focused on the next quarter and the quarter after that. Could you just lay out what you have in mind long-term so we don't get caught up in the minutiae here?
Yeah, sure, Jim. We were really proud of our third quarter results. We delivered 3% core growth on our continuing businesses. Right. We delivered 25% earnings per share growth. We delivered over 50% operating cash flow growth. And we did this in the context of a tremendous amount of change. Right. We're driving a new strategy into action, a strategy that sets up new investment priorities, establishes a new set of portfolio choices, and simultaneously reorganizes the whole company. And so delivering that kind of performance in the context of that type of transformation, I think is a pretty solid outcome. And so we were very pleased.
Now, what were they really? I mean, I know that some people felt that Jarden, for instance, an analyst I know very well, respectful, saying, listen, Jarden is a dramatic deceleration in earnings here, and that you're really lapping some very difficult comparisons. I thought that Jarden was fine. I mean, what am I missing?
We had terrific growth in the appliance business. We had the continuing challenges in our outdoor solutions business, right, which is Coleman, which lost some distribution a year ago, and we're living with the rollover effect of that. We'll get that back on track with the benefit of a little bit more time. We're really pleased with the assets we acquired from Jarden. Our vision is to take a brand development, insights, design-driven model, innovation-driven model, and extend it across a broader set of categories. We've established a set of priorities for investment, and those include both Jarden legacy businesses and Newell Rubbermaid legacy businesses.
All right, one of the things I'm trying to emphasize, and right from the top of the show tonight, and for weeks now, because it's so difficult to find this market, is to find companies you like and buy shares in them, things you understand. You've got the whole panoply. Why don't you just pick some and tell us what your strategy is so people know how important, tangible things you've got right here.
Look, we have the privilege of making life better for hundreds of millions of consumers every day, where they live, where they learn, where they work, and where they play. Okay. We're a household goods company that covers those different landscapes. Okay. And the scaling of the company that's happened as a result of the Jarden combination creates an immense set of opportunities for us to create disruptive value creation. Our focused priorities are writing, the appliance businesses, our baby gear businesses, the food businesses, whether it's legacy Jarden or whether it's legacy Newell Rubbermaid, our beverage businesses. These are fast-growing categories in the consumer space.
And you had great international growth, but talk to me about that, because the combination of the two seems to be some areas you were good in for one company, some areas you're good in for other.
Sure.
The combination is very strong.
Look, we wanted to make sure that the whole's greater than the sum of the parts, right? And so our vision for doing that is to take an advantage set of brand development and growth capabilities and extend it across the portfolio, disproportionately leveraging the scale of the company relative to a set of subscaled competition in each one of these different priority categories. And that's the vision we have for the combination. It'll take more than 90 days to pull a transformation like that together, but we're quite optimistic. We've got a team of people that have done it before on Newell Rubbermaid, and a team of people that are really excited about the prospects of doing it again through this combination.
Now, there was in the country a degree of slowing. We had a downgrade today of Home Depot and Lowe's. The thesis there is that people aren't spending as much on their home inside. Now, that's been difficult month to month. Are you seeing that?
Look, we don't see that in the numbers.
Okay,
and,
good.
I do see that in the headlines.
Yes.
But I follow the transactions as
Right.
opposed to some of the macro bits of analysis that are done. And, quite frankly, Jim, whether the macros are positive or whether the macros are a headwind, it's our responsibility as a brand-led company to beat the macros,
right.
And to deliver share and consumption growth well beyond what the underlying growth in our categories are. So we're focused on insights, design, innovation, scaling our collaborative growth capabilities to really unlock those opportunities.
We're focused on sustainability on our hour. We're focused on something that millennials care about, which is not throwing out things, waste. These seem like products that would make it so that we're not wasting. Tell me about them.
Well, look, we just launched a new line of food storage products called Rubbermaid Brilliance, which is a 100% leak-proof product. You could fill that up with water, that food storage container up with water, shake it upside down. It will never leak. And what you get with that type of seal on a food storage container is preservation, longer life benefits. We launched Rubbermaid Freshworks at the beginning of this year. Allows you to sustain your produce and your fresh berries 80% longer than if you were to store them in their original container, thereby eliminating the waste, the produce that you throw out. And so these are tangible, functional benefits. They're claimable functional benefits, whether it's 100% leak-proof or whether it's 80% longer. That creates value for the consumer. And so that's an important lever that we're always looking for. The seal on those beverage containers, perfect seal, never leak. The seal on our hot beverage containers, create a perfect vacuum such that you create and preserve coffee longer or hot beverages longer. PV equals nRT. It's Newton's law. So pressure builds, temperature rises. Right. And it's through that science and technology and design that you can create terrific differentiated benefits.
Well, that's what Matt, look, I know these things now because I got kids and I know what they buy. Thank you so much to Mike Polk, CEO of Newell Brands. That's NWL. People are too short-sighted. Think long-term. These brands aren't going away. They're getting bigger. Mad Money's back after the break. Thank you, Mike. Booyah! Jim Cramer here from Mad Money. Thanks for watching CNBC on YouTube. Click here to subscribe and get the jump on my exclusives with CEOs, plus market news, investing advice, and a whole lot more.